Well, we have a lot of good news that inflation is coming down as we had expected, and in most countries we are expecting it to be back to targets. At the same time, the global economy has been quite resilient, and we're expecting growth rate to be 3.2 both this year and next. The not so good news, however, is that in the medium term we're still expecting lackluster growth of a little bit over 3. To the downside. And the main downside risks that we see are escalation of geopolitical conflicts, ratcheting up of trade. Well, unlike last time, we think the risks are tilted to the downside. The main downside risks that we see are that we see an escalation of geopolitical conflict, or we see a ratcheting up of trade protectionism, or that we see more weakening in labor markets than what we expect in the baseline, or that we see a renewed bout of financial market turbulence. This is happening while global growth is resilient. We're expecting it at 3.2% both this year and next. Now, the not so good news is that in the we have three main policy recommendations. One relates to monetary policy for central banks to pivot towards providing more support to activity where inflation is under control. The second one is about fiscal policy, that we see the need for consolidation that is credible and that is done in a growth-preserving manner. And the third one is related to boosting that medium-term growth by implementing structural reforms to increase productivity and labor supply.